Hello, everyone. This is your market update for November 10th, 2023, starting with the headlines. World's biggest bank forced to trade via USB stick after hack. So, this occurred on Thursday. They had to shut the whole system down and they ended up running around Manhattan with a USB to settle a lot of their treasury trades. I don't know if this is a recurring theme, but over the last week, there's been several of these. Yesterday, I mentioned the Mr. Cooper attack, the largest mortgage servicer in the United States, had a hack, and we're still trying to figure out what happened with all the customers' data there. I think they're back up and running, but this is starting to get a little interesting. And a week ago, I didn't mention this, but a week ago, they had issues with direct deposit, the ACH network, the automated clearinghouse. A lot of people didn't get their deposits and there were delays. I believe that too has been resolved, but we're starting to see a theme here, and I'm not sure what it means. Uh, Whatever the case, it's probably not a bad idea to have some cash on hand just in case something happens where our bank and debit cards don't work. You're probably going to wish you had some cash in case you don't. So, jumping over to the 30-year, yesterday I mentioned this collapse was in yields was fairly significant, and then they reversed sharply yesterday. The government had a 30-year bond auction, and it went terribly and yields spiked. So there just wasn't as many bids as they anticipated, and that caused yields to spike. The big problem is they got another bond auction next week, Wednesday on the 15th. We'll see how that one goes. Over to Twitter, James Lavish. He's a really good bond expert, and he sums this up real quick. And basically, the primary dealers had to absorb 24.7% of the issues yesterday, and this is not good. And he thinks this could ultimately end QT and possibly turn to yield curve control. So if we see yield curve control instituted by the Treasury, that would that would be bad. That would be game over. I think gold would respond very positively to that. Over to Jesse Felder, he posted this. This was awesome. He said this was in the FT, the Financial Times. The greatest credit event of all would be a recession in which U.S. yields went up, not down. And that's a possibility. If they're having trouble issuing bonds and liquidity is drying up, we could go into a recession. Normally yields fall, but and with all the outstanding liabilities, yields actually could rise in a circumstance like that, and that would be catastrophic. I wanted to also touch on the overnight reverse repurchase agreements, the repo. So we fell below 1 trillion. You can see over here back in December of 22, January of this year, we were at over 2.5 trillion. Now we're below 1 trillion. This represents, in my opinion, basically excess cash in the system, and it is draining quickly. At this rate, we could be basically down to zero by February or March. And when the excess cash is out of the system, that's not going to be good for treasuries, in my opinion. Yields are probably going to have to go higher because this has been absorbing a lot of that issuance. Over to gold. Looks like we're just breaking a little bit lower right now. We're back down to the 200-day moving average, below yesterday's low. So it looks like we're still in correction mode. I put another trend line in here just to show you this is what happened last year. Prices broke higher, came back, retested the trend line, and then continued higher. So I don't know if we're going to come back all the way to retest this. If we throw a Fibonacci on here, last year's initial rally came back to around just not quite to the 0.50% mark, but yeah, we dipped down to 0.38 retracement, tagged the trend line, and then continued higher. And where are we now? Let's see. I think we're at about the 0.38. Okay, we're almost there. So the 0.38 is 1944, and we could dip a little bit below that, but the 50% retracement level is at 1921, which would correspond with retest of the trend line. Over to silver. pretty much doing the same thing it was yesterday. I kind of want to see this 21.70 level hold, $21.70. I'd like to see that hold. Right now, prices are actually holding up better than gold. Over to platinum. Platinum made a new low, so I noted yesterday the lower highs we've been making, and now we have another lower low. So best case scenario, this will be an undercut low. I thought this was happening here, but it didn't. But as you can see, last year we had a big rally, came back, undercut the low, and reversed. So we'll just have to see what happens here. If we look back, I wanted to point out that over the last several years, this is the $800 level. I'll put a line in here. Platinum has rarely spent much time below $800. We could come back to test this area, but anything below 800 didn't last very long. So I think this decline is getting pretty long in the tooth. We could come back to around 800, but yeah, anything below 800 doesn't last. And again, I think for long-term investing, this is an excellent opportunity. Physical, sovereign coins. I personally like the Platinum American Eagles and the Canadian 1 ounce maples. Those are beautiful coins, and they're reasonably priced if you can find them. And then over to the S&P 500. Big picture, this goes back to 2020. I believe this was phase one of a bear market after all this excess in money printing. Phase one, we had a massive rebound. This, I believe, was probably the soft landing that everyone has been talking about. And now I believe we're rolling over into phase two of the bear market. How deep it goes, I have no idea. I think prices peaked here mid-year, but we'll see. But overall, that's where I think the trend is headed for 2024. And then lastly, on Bitcoin, I have no idea what's going on with Bitcoin. Unless I'm dead wrong on my recession call, there's no reason Bitcoin should be rallying into a recession. My gut tells me that this is just a suckers rally that's going to draw in some of these degens that have been waiting to get into the crypto markets, and they're going to jump in, go long, leverage themselves up, and then I'm thinking prices are going to roll over when the recession hits. When, I have no idea, but that's just my big picture view on where I think the crypto markets are headed. So that's it for now. I hope everyone's well. Have a wonderful weekend. Bye bye.